Scott Bauer. He is the CEO of Prosper Trading Academy. Scott, good to see you. We want to talk copper in a moment, but first let's get to oil and what we're seeing there. How much of what happened today and what will happen in the short term is tied right back to what we saw happen in Texas?
You know, I think what we saw today is more the fact that it's going to take a little bit longer for many of these refineries to get back online than many had thought. You know, the expectation right now is maybe 2 to 3 weeks, even though the weather is, thank goodness, on the way out and people are recovering. It's going to take 2 to 3 weeks. So that's probably longer, or on the very long end of what the original expectations were. So that's why, you know, you're seeing a big pop up today, because, you know, supply is absolutely going to be affected over the next few weeks.
Speaking of which, we've got the OPEC Plus meeting coming up March 4th. You've got Saudi Arabia and Russia heading toward that meeting with differing opinions about what to do with supply on the market. What do you expect will the outcome to be? And is this going to really be a risk event for the oil market?
I don't think it's going to be a risk event. You know, the expectation is that Saudi wants to supply more. They want to stop their cutbacks, not all of them, but they want to, you know, pull back a little bit by April. So I think that is going to be the overriding theme here. But I really see that as pretty much priced into the marketplace, especially let's see what happens over the next week or 10 days prior to this meeting. But that is certainly the expectation. Now, there is always risk, right? There's always risk to an OPEC meeting that Russia or someone else may just completely disagree with what Saudi is saying, or Saudi, you know, could come out and say, you know, we want to not just pull back a little bit now and a little bit later, but we want to go back to our complete, you know, supply that we had back in 2019. I don't think that's going to happen, but that's where the risk really lies.
Hi, Scott. I want to ask you about the domestic supply situation and how it relates to regulatory risk with the new Biden administration. We've seen a couple actions already, notably the Keystone XL pipeline, kind of nixing that, and also halting new drilling on federal lands. How do you see this playing out over the next year or so?
I mean, it's not going away, right? This conundrum is not going away anytime soon, but it absolutely could put some supply constraints in the marketplace here. And if we do get an accelerated demand, and I don't, you know, I'm not as optimistic about that yet. I'm not as optimistic as Goldman Sachs is. But if we do get that accelerated demand here, that could really put some real big tailwinds on the price. And you were just mentioning just a couple minutes ago, could we see $80 oil? That is certainly possible if that all comes together.
So if you're not as bullish as Goldman on the price of oil, what is your range for crude and for Brent at the moment, Scott?
I actually think we're at a bit of a top right here. I wouldn't be surprised to see crude West Texas down back around 55 or so sooner rather than later. As long as the temperatures, as long as the recovery, the refineries can get back online in these next couple of weeks or so, that should put a lid on oil for the near term. However, the overriding theme is longer term, you still have this rising rate environment. You still have the inflation overhang, which is probably not going away anytime soon. So longer term, there are tailwinds to the overall market.
I want to just pivot real quick with the time we have left and talk about copper, which has been on an incredible ride, jumping above $9,000 per ton to a 9-year high. And a lot of that is because people are betting as the economy strengthens, you're going to see supplies tighten in that area. Do you think that we've topped out with copper, or how much more of a runway does it have?
I don't. In fact, we were on together last month and we were talking about it when it was 3.5. And I said, you know, I really think we're going to go 4 or higher. And not only copper, but I think silver. And when you take those two specifically, and especially compare it to gold, those two are more on the reopening side of things, right? When we look for demand, the copper and silver are used for construction. They're used for the reopening. So I think that's why we're seeing big pushes there. But with copper, I would not be surprised to see us breach those levels of 4.5 that we saw, a while back. But right now, there's no stopping it right now. The only thing in my mind that could stop it would be something extremely, extremely negative with the vaccine or reopening. And let's hope that doesn't happen.
Yeah, let's hope that doesn't happen. You said it. Scott Bauer, CEO of Prosper Trading Academy. Good to see you. Thanks.
You as well.